Hi, my name is Craig Lindner. I'd like to talk to you for a moment about the CGT Small Business Concessions. These are essentially a parallel superannuation system for small business owners. They're introduced in recognition that business owners reinvest their profits in their business rather than setting it aside in a superannuation fund. To access these benefits, essentially you need to satisfy one of two initial tests. The first is the small business entity test, and that requires the business to have revenue of less than $2 million, or satisfying the taxpayer net asset value test, which would require the taxpayer to have net assets of less than $6 million, excluding the value of your home and your superannuation. Once you satisfy one of these tests, you can consider whether you meet the requirements of 4 concessions that are in addition to the 50% general CGT concession. Those concessions are the 15-year exemption, the retirement exemption, the active asset exemption, and the rollover exemption. What I'd like to talk to you about specifically today is the 15-year exemption. If you have owned your business for 15 years and you meet the other requirements of this exemption, then there will be zero capital gains tax payable on any gain achieved on disposal. Furthermore, you'll be able to contribute up to $1.395 million into super without any implications from the contributions cap. Furthermore, there will be no contributions tax. Your super fund will most likely be in pension phase, so there will be no income tax on the income earned, and you'll also get a full refund for any franking credits generated off dividends received. This then becomes an incredibly powerful retirement planning strategy for business owners exiting their business. If the funds in your superannuation fund are invested at 7%, that would give you an after-tax income stream of approximately $195,000 per annum. That's very, very effective. So the question for you is, does your current structure work to allow you to access this exemption? Secondly, I'll make the point that these provisions are quite complex, but they're also very, very valuable. So my recommendation to you would be to always get written advice in relation to the applicability of these exemptions to your circumstances, or to get a tax ruling. These provisions are not only relevant to the sale of your business to a third party, but can also be applied where there's a sale of your business to another family member. If this is of interest to you, feel free to call me at any time so that we can meet to discuss how we might be able to make this strategy work for you.